Central banks around the world is taking a lot of action. Let's look at the monetary policy and the interest rate, which are interconnected with the inflation, money supply. What's happening around the world? Let's look at it. Now, let's talk about US to start with. US Federal Reserve said it would end its pandemic era bond purchases in March and raise interest rates thrice next year to cope up with surging inflation. With the 3 hikes, the rate will be in the range of 0.6 to 0.9% 2022 as against the current rate of 0.1%. So 3 hikes are possibilities. The Fed raises GDP projection growth to 4% in 2022, up from 3.8%. The expectation is that as long as communication from the Fed remains strong and again very clear, and any kind of policy shifts are well telegraphed, that will not see major disruptions in financial markets. Now, otherwise, financial market is highly volatile. Now the communication has been spelled out with clarity. Let us see what happens. Let's look at the Bank of England. The Bank of England last week hiked the interest rate for the first time since the onset of the pandemic, increasing its main interest rate to 0.25 from the historic low of 0.1 as inflation pressure mounted. So they also moved. Meanwhile, the labor market recovery has remained robust, with over 250,000 staff added to the payrolls in November, even after the end of country's furlough scheme. There's a scheme which they have rationed the overall labor framework. Now, if you look at the Bank of England, they also revised down its expectation for the UK GDP at the end of the fourth quarter of 2021 by announcing 0.5% since the November report, leaving the economy about 1.5% of its pre-COVID level. What about Japan? The Bank of Japan has announced a plan to scale back its emergency economic support programs, tapering its corporate debt purchases to pre-pandemic levels, as it follows other big central banks in facing this crisis through policy framework. They have to, in fact, phase out the crisis. Now, when it comes to Bank of Japan Governor, Mr. Harikiko Kuroda, last Monday, he said it was too early to consider normalizing on the monetary policy, bolstering the view that the Japanese central bank would lag behind other central banks in dialing back the monetary stimulus. That's too early. Bank of Japan is saying that we shouldn't rush to judgment and make a mess of it again. You have to reverse it at a later date because nothing is over. Now, when it comes to ECB monetary action, bond buying under its 1.85 trillion euros, that is nearly $2.19 trillion, pandemic emergency purchase program, which is due to end in March. It has to be done. Then will be cut next quarter as the scheme winds down. So this is something Christine Lagarde has to come to terms. And she has been saying this, the pandemic emergency purchase programs, which is likely to be, conclusive in March, will be reduced. However, the bond buys under asset purchase programs will be ramped up, having continued to a monthly pace of 20 billion euros in conjunction with PEPP. ECB left with benchmark refinancing rate unchanged at 0%. That's a good decision. While rate on marginal lending facility remains at 0.25 and the rate on deposit facility is kept at minus 0.5 in line with the expectation. That's what everyone was hoping for. So it's a very synchronized opinion. Inflation across the Eurozone hit a record of 4.9% in November, while the new COVID Omicron variant is spreading across the continent and the Delta strain has already forced several European economies back to partial lockdowns. Now, incremental productivity comes from emerging markets. Let's look at what they are going to say. Say in December 2021, Brazil's central bank raised the interest rate by 150 basis points and signaled another such a hike in February, waging one of the world's most aggressive battles with inflation as Latin America's largest economy has tipped into recession. In December 2021, the Bank of Russia Board of Directors decided to increase the key rate 100 basis points to 8.5% per annum. Inflation is developing above the Bank of Russia's October forecast. So imagine the impact on the inflation will have on the interest rate. That's what the repercussion is all about. The contribution persists. Factors to inflation remains considerable on the back of the faster growth in demand relative to output expansion, which they have the overall outline capacity. The SUB hiked its main repo rate by 25 basis points to 3.75 from a record low. That's another development. The Reserve Bank of India Monetary Policy Committee voted to keep the repo rate or rate at which the central bank lends to commercial lenders unchanged at 4%. Clearly, if you look at the inflation and the interest rate, they are not deviant as far as India is concerned. India's monetary policy has been very well managed, as good as the fiscal policy. There is an alignment. So the economy is in song relative to the rest of the world so far this year. Prediction can go wrong tomorrow. But if you look at the inflation and the interest rate, it's not widely different. China cut its lending benchmark loan program for the first time in 20 months on Monday in a bid to prop up growth in the slowing economy, although it remains wary of loosening conditions in the country's highly leveraged property market. So that's this big picture. That's on the monetary action on the emerging economies. ECB monetary action, Japan monetary action, Bank of England monetary action, and the Fed action. So interesting days are ahead. How the monetary policy is going to get evolved in the coming days, it remains to be seen.